How much more room does the rally have to run? Joining us here at Post 9 this morning is Trivariate's Adam Parker. Dr. P, it's good to have you back.
Yeah, thanks for having me. Good to see you guys.
I'd be curious to know how you were characterizing this recent run we've had that's centered around a Fed pivot, so to speak.
I think the distribution of outcomes is still skewed to the positive for the next 12 months. If the average stock's gross margins go up and you're going to get accommodation from central banks in the U.S., probably Europe, maybe Japan, history dictates that's a pretty good combo. I mean, if I've learned anything in the last 30 years, it's fighting the Fed is not an intelligent idea. I don't know what the second thing I've learned after the first one is, but I could try to find one. So if you're going to get some accommodation, whether it's, 3 times, not 6, whether it's the second half of the first, I mean, there's some wood to chop on the details, but they're going to higher probability they cut than hike. and I think the median stock can argue maybe the logistics costs are coming down, maybe there's less labor pressure, maybe they can have some productive employee bases, and I don't know, maybe that's the bull case that has a higher probability than what's in the price for some companies.
And yet there's this narrative out there that the market could be overbought. Do you think it's discounting enough of the risks at these levels?
I think overbought is a technical term that has a shorter horizon than I meant. I think for sure there's stocks that are overbought. And the number one conversation I have with clients in the last 2 weeks has been, will we get some kind of nasty rotation underneath starting in January? I think last year's lesson was, you had to cover your massive Meta, Tesla, and NVIDIA shorts in late December of 2022 and get massively long on January 3rd, and that was your God if you did that, right? So I think people are saying, look, there's a lot of growth cyclicals, whether they're housing related, as Rick just talked about, or whether they're electrification industrials or like select NASDAQ names are just up a ton. So I think people are suspecting maybe they're overbought. I could sell those and find something that has better risk reward. And so I think there could be a lot moving on in January pretty quickly. Maybe it's payments, which are left for dead. Maybe it's healthcare services, which I think estimate achievability above average. A lot of the metals and energy look like they're discounting a recession, but none of the consumer and NASDAQ looks like it's discounted. So I think underneath people are betting on a rotation a little bit.
Do you think the market is behaving in a way that it feels like mission accomplished essentially for inflation? I ask that because then you see news headlines from the Red Sea, which we'll get to in just a little bit, which is already creating much more cost pressures for that very critical passageway for shipping.
Yeah.
Do you think that the inflation picture is still a bit vulnerable at this stage?
I personally don't think they're going to cut 6 to 7 times between now and the end of January of 25 or whatever is currently in the price. I think it'll be less than that. I think the dream of accommodation is what's bullish. Once they start doing it, it really depends on if they're doing it because unemployment's rocketing up and the economy's falling sharply. If it's sort of an erode, not implode environment, and you can dream there's a little bit more accommodation coming and companies, the average company can show a little bit of margin expansion, then that's bullish. And I think people think that's a 20% chance, and I think it's more like 40 or 50, but there's a lot of different, paths that can still be taken at this point. It's hard to see all the way through. I think the bull case for equities is probably also that maybe earnings can just grow a little bit every year for 5, 6, 7 years in a row. And just like in 2012, everyone was negative, but if I told you in 2012 earnings were going to grow to 19, you wouldn't have been so negative. So maybe another possible scenario is generally S&P is a pretty good set of assets, and it's a lot better than the economy, and probably can grow earnings for several years, and then it'll grow into itself a little bit.
Have you changed your earnings target, your numbers?
We do our year-ahead outlook January 8th, and so we kind of, one of the things I love is that all the big firms do it in November, and then they already have to revise stuff in December because they wanted to have 7% upside, and they already got 5%, and they seem too bearish at 2%, so they changed it already. So I don't see any reason to have to change my mind before the year even starts for the next year, and I'd like to see where the consensus is. And I think generally, my view is a little bit more optimistic at this moment than that distribution of consensus from what I've seen in the year-ahead outlooks.